What's up, Outliers? Happy Saturday. Quick stream today, just taking a look at the meme stock world, seeing what's going on, what's top of mind. So if there's specific names that you would like to take a brief look at, please let me know. And yeah, looking forward to checking out the market. One super quick note. There were a couple comments on the last GameStop video that I did where, I don't remember if it was last week or the week before where we did that stream, just kind of exploring the warrants. And somebody had mentioned very respectfully, they were saying that, you know, they don't think it's good, or they don't like when GameStop is like bucketed into meme stocks. And totally understand the concept. The point for me to reiterate, at least in my term of the use meme stock, is that it does not inherently have a negative connotation by definition. So a lot of people attach a negative connotation to it in how they use it, and I don't dismiss that exists at all. It does. However, there is no other term for what an actual meme stock is. And the actual definition of a meme stock is literally just something that's popular on social media or gains popularity through social media. So there's big companies. Nvidia is a meme stock. And that, again, by definition, that doesn't mean that it's like small, easy manipulated, and the people that are investing in it or any kind of way, like it's not. It's just super popular in social media. You see it everywhere. So just throwing that out there, because I am not saying in any way that there aren't negative connotations. There are. It's just obviously not the way that I'm using that term. It's just the only term that describes these kind of tickers that are just super popular in social media. That's kind of the concept of a meme stock before the term got a little bit perverted and, you know, weighed down by negative connotations. Kind of like the same thing with argument. The term argument has a really negative connotation in that two people are like fighting with one another. But realistically, the definition of an argument is just the exchange of ideas, counter ideas. I have an idea, you have a different idea. We argue back and forth, but arguing can be done in this kind of tone with somebody that you like a lot and you're exploring an idea. Similar concept. So just throwing that public service announcement out there early on in the video so that the people that hear GameStop mixed with meme stock don't take it the wrong way. That's obviously not the way that I'm framing it. Plus, I've been around this community long enough at this point to fully understand that would just piss a lot of people off unnecessarily. So I wouldn't do it in that context. All right. Let's start with a couple specific stocks that I want to take a look at. The fun fact, right before the stream started, I was going through X and HIMS was trending. So I actually want to take a look through HIMS and see why it's trending. I like legitimately don't know why it was trending. So I'm going to throw that in first and see if there's any specific news circulating about it. So it looks like short interest is super high, which is 37%. Okay. And then it's just a bunch of charts. The funny thing is, I find it so interesting when people share their charts. It's like people like sharing their art. It's very, very interesting. So let's take a look at HIMS. Malik says, what is RKLB a meme stock? Wait, why is RKLB a meme stock? Just because it's super popular in the internet. So if I look up top meme stocks from a couple different sources, so we'll start with QuiverQuant. And on QuiverQuant, it has SoundHound, Rivian, GameStop, AMC, SoFi, ENVX, ANVS, Lunar, EOSE, SMR, Novak, so on and so forth. Rocket Lab is 15 on that list. So again, when we're looking at the concept of a meme stock, it's not not in a negative connotation. There are huge successful companies that are meme stocks. It doesn't mean anything bad whatsoever. It's just a class of stock that are very popular in social media. Howdy says, is GameStop really a meme stock in 2025? Absolutely, without a doubt. Howdy says it trades like Coca-Cola. That is the most inaccurate way to assess its movement. And it's funny because it just shows how used certain traders are to certain trading behavior in something like GameStop. I just find the thought very, very funny. So here's why this is the case. If we look at a 3-month range for GameStop, it's 24.7%. If we look at a 6-month range, it's 72.7%. So if we look at a 20-day range, it's 23%. Let's take a look at Coca-Cola just to run the same comparison out of curiosity. Out of curiosity, the 12-month range for Coca-Cola is 22%. So Coca-Cola's annual range is about the same as GameStop's 20-day range, AKA they are not the same. But I do, joking aside, I do totally understand what you mean, because GameStop relative to itself has been very, very quiet. That is objectively the case. We can see that in implied volatility percentile at 22%, right? Like it is quiet relative to itself. So fully understand the underlying notion, but it is hilarious when we actually compare them and you see like this thing is on an annual range, it's over 3 times as volatile as Coca-Cola. It's like not even close, but it's funny. So going back to HIMS though really fast, just out of sheer curiosity, this thing, I don't really trade it that much. I follow it, but I don't really trade it that much. It does look like it's growing, but I mostly just want to take a look at the options chain on it to see if anything looks interesting to us. Is that I'm kind of curious about. All right, let's take a look at HIMS. Dijon Mustard says GameStop moves like GameStop. That's facts. GameStop does trade just like GameStop. Couldn't say it better. So the working investor says, as the youngsters say, Coke has no Riz in its fizz. Yeah, well, Coke is doing a good job taking all their fucking money still. So Coke's got it dialed in, whatever the kids say about it. Dijon Mustard says, we are in Richard Newton's Babe Ruth photo. I have no idea what that is in reference to. I was catching up with Newton, last week or the week before, but I haven't chatted with him in like a week or two. So I'm not sure what that refers to. So for HIMS, let's start, I guess we'll start here. Okay, so definitely got a little busy back here, but it's been relatively quiet since. And actually the activity that we saw here on the 18th looks like it's still relatively active, right? Because we can see that there's, what is this? 10 million in call premium. And if I look out on the short side, meaning looking for any unwind in that long premium, I'm not seeing it. So it looks like that's still, happening. Let's take a look at the options chain itself and see what's up. Dijon says RN predicted swap cycle. Missed that guy. Well, the good thing about Newton is, I mean, he shared all his work with you guys, right? So if there's anything that you found that was like really useful, you literally have the exact tools that you need in order to essentially carry the work forward. The interesting thing, and he and I talked quite a bit about this, like I spent a lot of time running like different kind of statistical analysis on the stuff. And the same reason why he pivoted to trading a lot of just general short premium and effectively like short puts, covered calls, the wheel / covered strangle is because of the persistent vol in something like GameStop. We'll just pivot to GameStop because that's obviously the topic. So the thing with something like GameStop is even when it's trending sideways as heavily as it is here, there's still a lot of volatility in the name. So if I look at risk premiums, again, looking back in time, risk premiums have been so unbelievably fat all the way from here, really since July, like second week of July. Risk premiums have been so fat. And the reason is because even though volatility has been low, this is a primary example of when implied volatility percentile, implied volatility rank can be relatively suppressed. It can be low. Yet it's still really, really good from a general volatility trading perspective. It means that we're seeing volatility priced richer than what's ultimately happening in realized. So the benefit to something like that is if you trade something like a covered strangle, the wheel, those will benefit from this kind of thing. For context, I still am trading the covered strangle in here as I've discussed previously. And to give you context on what that looks like right now, the covered strangle that I have on is up around 28.8%. So the covered strangle that I'm trading is up 28.8%. And this is from when I started this. I started this on like the end of December-ish. So GameStop was around like what, $24 then? Let's double check that, see if that's accurate. It was around the December timeframe. Oh, even higher. Yeah, even higher technically. When did this actually start to make this accurate? 18 December is when I started tracking this one. So 18 December is here. So really, I started trading it, we'll call it when it was like $29. So from when I started trading the covered strangle in here, the underlying right now spot is what, 26.42. So the underlying is down 8.9%, down 8.9%. Yet the covered strangle is up 28%. They're both long bias trades. That has everything to do with volatility. It's what makes the covered strangle such a favored approach in something like GameStop. Maybe we update this to be covered strangle in GameStop, because that's pretty much what we're talking about. And you know your boy will talk about it. Howdy says, I know you were tracking Roaring Kitty's GME play, but did you ever figure out how it went from 50K to 200 million in 5 years? I'm assuming half of that had to be margin, but even then it's $100 million. No, not really. I mean, I think we spent a lot of time dissecting that. And as we went through the cat's trades, a couple things were really, really apparent. And it's that he did good. He did really well before he disappeared the first time. And then he came back with a lot. Now, when he came back with a lot, it's really hard to objectively analyze like what happened there, right? Like what did we have before? And then what did we have following? So if we, again, go back in history to our archives, and we can see a year ago, the cat started posting here. So when we left, we were at like 34.5 million. And then when we came back here, we were at 210. So there's a big delta here. And if you think about that 4-year difference, right, we can figure out what that growth rate is. So I'm going to ask ChatGPT, if I had $34.4 million and in 4 years have, what is it, 210.6. What is my compound annual growth rate? Because the compound annual growth rate here is good, but it's actually not that crazy. So to go from 34 million to 210, that's 57% return per year. Like, that's very high, and that's very difficult to do, especially consecutively. But to give you context, I've had really good return paths. So like, for example, in my last 2 years were, one of them was triple digit return. The other one was just shy of a triple digit return. And then before that, it's like mid 20s and then a high 30s. So the point is, if you take that kind of performance and you extrapolate it out, it's entirely possible to generate those kind of returns. I just told you from December until now, my GameStop position, which I'm trading wildly conservatively, is up 28%, right? So it's really not that far of a cry. The thing that made this so miraculous in the beginning, realistically, is the move from when he started like 100 grand to this. And as I talked about before, I know a lot of people really, really want Roaring Kitty to be like a deity or deity and to be omnipotent, but he's not. And this is no disrespect to him. It's actually the opposite, because if he's omnipotent, then of course this would be easy. It's not. But there's a glorious mix of what happened with this position, right? It started as a YOLO. So the concept of a YOLO, especially in the way that he's executed it, it's very clear that he had a certain amount of money that he's willing to risk, and then just put that money at risk and effectively said, let's see what happens with it. So very, very risk on, but still applying decent fundamentals, right? Like, he wasn't YOLOing 7-day out of the money calls. Like, you can tell that his YOLO is very different than like a typical Wall Street Bets YOLO. A standard Wall Street Bets YOLO is, I'm going to put my life savings on a SPY up or down single day, which is crazy. So the starting point for his position is that he found a stock that he really likes. He's done a ton of research on and is very confident in his research. He takes a subset of his portfolio, decides to put it into the stock. You see how it does. And then he's met, fortunately, also with happy path. That's one thing that people really, really don't like to hear when I talk about Roaring Kitty's trade, the fact that there is a healthy dose of luck that is included in this performance path. And again, anybody that doesn't like to hear that, really just, it's kind of like maybe them hearing that Santa Claus isn't real, right? It's the reason why there has to be luck involved in this path. There's a lot of luck involved in what I do. And I can clearly identify and see that, because there is a reality about the sequence of returns. What does it happen to be? And in this case, it was met with those two things lining up, meaning, well, three things: strong conviction based on good research, definitely a fundamental technical understanding of derivatives, leverage, and good path. Like, those three coalesced into a super, super favorable circumstance for him. And I couldn't be happier for him. Like, this is awesome. We on these streams have literally spent dozens, if not hundreds, that's too much. Maybe about somewhere around 100 to 200 hours analyzing specifically the cat's trades, GameStop, in the context of him trading, not just like the story of GameStop. We spent way more on that. Because I've even had streams with Newton in the beginning where he and I talked for fucking 4 or 5 hours. So some of the streams that I've done were obviously pretty long. So yeah, it's like all of that is very, very, very clear to me that there's a pretty good mix of those different events. Now, Howdy says, I don't think he did all of that with GameStop in those 4 years. The fact is, we will literally never know until he tells us. That's it. But one thing to keep in mind, is let's go back in time. Let's just ballpark it really quick. So when was the last date that he posted? 16 April 2021. Okay. So let's go back into on demand. Again, just for an exercise. Let's go. This will be fine. So popped out here. If we look at the price movement in this range from when he popped off in April until when he came back in 2024, right? Around this time frame. In this time frame, the stock moved a whole lot. And that's a lot of potential volatility to trade. Funny enough, risk premiums in this time frame are quite low. So it could have been in this stock. It could have not been in this stock. Again, the thing to keep in mind is that return on the 30 million and change over that period to get it into the hundreds of millions is, again, 57% per year, compound annual growth rate. That's very aggressive. But that is not outside the realm of possibility with skill mixed with good luck. Now, for that to just continue into perpetuity, when we start talking like 20, 25, 30-year trading career, is not going to happen. That normalizes over longer periods. But could you have a favorable 5-year period? Sure, it's definitely possible. Because the other thing to keep in mind is you don't have to have a 57% return every single year. You could have a couple years that are triple digits that you happen to smash it out of the ballpark. And then the other ones just have to be like pretty good. So it's definitely possible. Coffee says he somehow knew when the bullet swaps were going to need to be renewed. I actually don't think anybody could actually make that assertion logically. This swap business and this cycle business, even with the amount of research that we've done on it and I've done on it personally, the correlation in future predictability is very low. It's very, very, very low. So I do not think that that's the case. The other thing when it comes to these swaps and stuff, if he's actually trading those, he doesn't pick the expirations that he does, right? It doesn't make any sense whatsoever. If I'm playing some sort of near-term swap and then some sort of short-term price expectation, I'm not going to go out a year with my options. It literally doesn't make sense. So I actually refute that pretty heavily just on the basis of the way that the trades were placed, the way that the trades were managed, because we can see very clear instances where if he was able to perfectly time it the way that people think, that it wouldn't have been managed the way that it was, right? We could see some of the management based on the updates. And I want to be super clear. None of this is tearing down the cat. I have a lot of respect for him. This is giving him credit because I'm saying that there isn't some like blueprint that he just figured out and followed. That literally would be easy. That's not what he did. He traded. He speculated very, very aggressively, but he managed it well and he made it work. So I don't see any evidence whatsoever that there was some sort of like predictive cycle sorted out. And I definitely don't see that reflected in any of the positions placed. It just doesn't line up at all. Howdy says, so he got this lucky for 5 years. Even 5 years seems like a lot. Again, sometimes when I talk about this stuff, it's hard to understand the way that people are interpreting it. I'm not saying that this is just a product of luck. It's not. He absolutely had conviction, and then he absolutely had a good fundamental technical understanding of options. Those are two things that require a lot of effort. So that's the basis. Now, the probability of having 5 years consecutive of 50% plus returns, again, is low. Not impossible, but low. The probability of across that 4 or 5 year period that we have maybe 2 years that are triple digits sprinkled through, and then the rest of the returns are closer to the 20% mark, that's ultra realistic. But that's also complemented by a favorable path. So the idea of having a 5-year favorable path is entirely realistic. We literally had a decade-long favorable path. So if I go into SPX and I zoom us out further, literally from the 08-09 crisis all the way up until COVID was effectively a one-way rally. Effectively. That's a decade. That's literally a decade. So a 5-year favorable path, entirely realistic. Also, we have the resident risk manager. Scritchy scratching at the door. 1 sec. As soon as he heard we were talking about the cat, our boy immediately emerged. This is post-dinner. You have anything to say to the people? He's still standing. Normally he kind of squats down by now. Nothing? Say hi. Boy. There he is. As you could tell, he's a man of many words. He has a lot of thoughts, but he's always happy to chat with the cat. Howdy says, so I'm assuming being able to do what he did without options is almost impossible. Yeah, you need leverage. And this is one of the funniest things I have to say. When I first learned about the cat, I don't even remember how this whole thing started with me, like how I got involved. I was trading GameStop at the time just because it looked interesting to me, but I don't remember how I got like inundated in like the community. And again, I still 100% am a guest. So when I say inundated in the community, I am a guest in the GameStop house. You guys have been gracious hosts, but I have not been around that long. I've traded in and out periodically when it's made sense. And that's about it. So that being said, when I first got involved, everybody was talking like options were bad. And it was all about DRS, which again makes sense as a communal strategy to decrease the float. Like, I think that that's fair. But the funny thing is like, that's clearly not what the cat was doing. Roaring Kitty was using leverage and he was trading directionally. And I can see that, right? Based on the very first position that he shares is essentially a bunch of calls. Like, that's essentially what this is. Coffee says RK had to do it with options, using their premiums against them by selling covered calls and cash secured puts. I also don't think we can say that. Like, I really don't think we can say that because we've never seen those positions reported. So I think it's a massive leap in order. The first thing is we don't know. And it's really important to acknowledge that we don't know. We can't say anything definitively in terms of what he did other than what's posted, right? That's our starting point. We can't say anything definitively. And it's because we don't know. We weren't there and he hasn't told us. But if we apply just general practices of analyzing what's there, I've not seen any short options, not once. And he's posted quite a few times. So does that mean that he didn't sell calls and sell puts? No, it definitely doesn't mean that. Is there any evidence whatsoever that alludes to that occurring? No, not at all. The only evidence that we have actually alludes to the contrary, that effectively all he's done is be long calls at different points. That's effectively what we've seen. And then as the stock position grew, that's when he rotated from his options position into the stock position. So yeah, I don't see any evidence whatsoever that he was ever short an option literally at all. Would I assume that it happened? I genuinely don't know. But based on what I can see from his behavior, I don't see anything there that would lead me to believe that he did. So if somebody believes that he did, that's fine. You can believe it. But it's really important that we couch that belief in that it is just a fucking guess. It is a blind guess. because there's no artifact of that anywhere in the evidence. Howdy says, if I remember correctly in your videos, you would say the options he would buy were never really short dated either, right? No, they weren't. We actually had a log somewhere. I wonder if I still have that. Let me look really quick, because we had like an entire log that I built analyzing Roaring Kitty's trades. Where the fuck would it be? Oh boy. I do not remember. Let me see if I just type in like GameStop. Oh, me. No. Yeah, I have no idea where it is. But we spent time a while ago actually going through like each of the positions, and there was a very small number of instances where he did have very near-term options, but all of that was in the beginning. And it was super, super clear, a couple trends that when he started building the positions, they were typically further out in time. And then the other trend is that he averaged into them. The other trend is that there was a mix of positions that he would take quite close to expiration, some of them allowing them to expire out of the money. But more often than not, he was managing them before it got to expiration in terms of taking the position down, rolling it out to something else, or just simply establishing a new position. But yeah, the overwhelming majority was at least moderately dated options, if not long dated options, technically speaking. There were, I distinctly remember, a couple anomalies where it was a short-term option, but those were very, very rare. I literally can, like, if I'm remembering correct, I literally think it was only like once or twice that we actually saw that. Mashton says, do the warrants being added to options change your strategy? They are changing from GME to GME1 with 100 shares and 100 warrants per contract. No, mine's the same. I'm literally just trading a very foundational covered strangle in there. And as I talked about the basis for the trade, a lot of it literally was just to participate with the community. And since I am not a financial advisor and I genuinely do not give any financial advice or personalized financial advice, one of the best ways that I can try to help teach people is just by example, right? And explaining like what I'm doing, how I'm doing, why I'm doing, so that then people can just learn and then figure out what's best for them. So that's really the main basis for the covered strangle, is using it as an example of a very basic fundamental way to trade GameStop that honestly has been supremely successful. And a lot of that has to do with the fact that volatility in GameStop is so high. I think I started, what was the original allocation that I used for the covered strangle? I think it was like 20 grand or 25 grand. I tried to pick a number that was kind of like closer to what people generally would have. But the current value of the position based on what was gained is already like 35 grand. That's not including any addition, meaning adding any money to it. So the position itself is growing, and that's primarily because of the success in generating profit from it. So no change, definitely no change to what I'm doing. The cycle analysis and stuff, I tinkered with that from a theoretical lens, meaning I studied it ad nauseum, and then I ran a ton of feature tests to analyze the predictability of when these different cycles were theoretically meant to occur. And I never found anything conclusive. I definitely found instances where the cycles lined up. But again, a lot of times people, unfortunately, when they're conducting an analysis like this, they start with like poison fruit from the tree. And what I mean by that is a lot of times in these cases, people are trading in the context of, I want to see this outcome. How do I find it? And unfortunately, that's not the way to objectively study something. The way to objectively study something is, I think there is some sort of trend with these swaps. I want to analyze what it is. That's a completely different question. And it forces us to spend more time trying to punch holes in it versus trying to build a supporting case. And it's just way more rigorous. The purpose behind it is that if you do observe a relationship after that process, you fucking know there's a relationship there. But again, I've spent a lot of time in stats with my undergrad and grad, so I definitely am competent when it comes to running those kind of correlation studies, strength studies, and really there wasn't anything highly predictive about it. So yeah. Lauren says, when you were analyzing his trades, I was so new to options that I didn't understand it. I should do a rewatch of those. That would actually be fascinating, Lauren, to see like what you took away. Is that how you found the community, through GameStop? If so, that's really cool. That's one of the reasons why I've spent so much time on GameStop, is because there's a lot of people that trade options because of what was going on with the phenomenon with GameStop. And my hope was to just try to help people from lighting their money on fire. That's the entire basis for how I started this whole thing. Because whenever people would send me posts or ask me questions, most of them are trading like super near term, super far out of the money options. And they're just lighting their money on fire, which always sucked. My underlying basis for a lot of this stuff, and it remains the same, is that the exact kind of people that are trading these sort of things are the exact kind of people that do not have the disposable income to light on fire unknowingly, right? Like these are the exact kind of people that really are trying to use this or just the general trading skill set to build something for themselves to help change their lot in life. And I respect that. It's why I started trading. Obviously, I trade very differently than most of the GameStop community, and it's just because this is effectively how I make a living, so I have to. And it's effective for me. So I'm very, very happy and fortunate with the way that my trading has gone. But I definitely have a lot of respect for what people are trying to do with stuff like this. So I do my best to help where I can, specifically with trying to guide people towards different ways of implementing the leverage of options so that we're not just literally lighting money on fire, which sucks. Always sucks. Dijon says, past performance does not mean future moves, but I see a cycle with my graphs. The problem, my guess is that if we applied like an actual like rigorous statistical study, that you probably don't. My guess is that you think you do, and it's likely because there's a lot of confirmation bias in what you saw. But my guess is if we like literally ran a pretty profound and rigorous study, meaning we track each quote unquote call or future expectation, I think we would find a different realized result. And again, that's not putting you down. That's just acknowledging the reality of trading. I've been doing this I'm in my 19th year of trading. I've been doing this a long fucking time. And I am not able to like accurately predict stuff with some sort of super high accuracy rating with near-term price movements like that. And just because I can't do it doesn't mean other people can't. Other people definitely could do it. But I've seen enough and I've done enough of these kind of studies to understand them pretty well. Howdy says, I don't know shit about options, but I'm assuming the way to go is long dated and in the money. I see it with Pelosi and it works. Yeah, so I actually have a specific video for GameStop people on buying call options smarter. So let me find... let me see if I can find it really quick. Where the fuck is it? Oh no. I'm actually genuinely confused. Have something about buying versus selling. Try this. Here we go. Oh, that's why. Title is kind of weird. For Howdy, this video is for you, which is essentially how to think about buying calls smarter. But the cliff notes for the video is that there really isn't like a blanket methodology that you can apply in order to just have like a it's more nuanced than that. I think that's the easiest way to frame it. It's definitely more nuanced, way more nuanced than that. But that's not a bad starting point, that's for sure. I think it's an okay starting point. ZXborg says, I bought 6 in the money 20 calls in July, sold a while ago, but today would only be break even, theta decay, and premium loss ate my theoretical gains. Well, yeah, and I mean, I guess if you're already out of it, it's a moot point, right? It doesn't really matter. Yeah. TCM says, I'm studying a lot about how to determine where to set stop losses. Could you talk a little bit about how you would analyze GameStop and where you would say this current run would be invalidated? For sure. It's a great question. So first things first, I also have a video for you on stops and how to use stops in options trading. So TCM, this video is for you. And it just gives you a slightly deeper look at the concept of stops. But to talk about this move in GameStop specifically, the way that I think about this kind of move is very, very specific. And it's because we've been channeling sideways literally for months from the beginning, mid of June. We've just been running straight sideways. So depending on how you view this recent move, which also was catalyzed by earnings, the easiest way is determining, based on your holding window and what kind of approach you run, what you think to the upside and what you think the kind of move could look like. So in that context, when I look at this personally, I see this kind of gap up, which is good. Now, this gap becomes an area of interest, specifically a drop below this gap. And if there is a drop below this gap, effectively the catalyst itself has waned. The catalyst itself is gone. So then if we look at the recent price behavior, we had a rally up. It started struggling at these levels, right? We can see kind of 3 candles around the same level. And then it dropped down. It dropped down below this near-term support because it really wasn't super strong. And it started rallying back up into this little volume node, right? That's what's building out right now, all this price behavior around this volume node. So I would view a couple things. The first one is if there's a drop below this volume node, that to me is the first red flag that would likely be accompanied. Like if I was some sort of, if I was long options with an expectation of trying to play a continued move momentum in this direction, which honestly I wouldn't do. But if I was doing that, that would be the first exit criteria. Is if it drops below this volume profile, it means that this did not ultimately serve as corresponding support, too weak, and fell down below. So that's the first threshold. The next threshold after that is actually a drop below the low, or you can use the low or the close of the breakout itself. So something like that. Now, to integrate the idea of using stops, it's actually really easy. And I would think of it this way. I would say, based on my portfolio size, right? Whatever size portfolio we're going to tinker with. So let me grab my workbook and let's find some space. And let's say that we have a $100,000 portfolio. And let's say of that $100,000 portfolio, you want to risk 1% on this trade. Obviously, you can pick whatever you want. So we can easily scale things. We now know we're able to risk $1,000 on this trade. Cool. So what I do is then I figure out what option I want for this kind of trade. Again, this isn't one that I would do, but let's just say I did. And let's say that I go out about 90 plus days to the 111s. Let's say that I go slightly in the money to like these 65 deltas. And I analyze my position. Let me get rid of this other stuff that's in here. And let me take a look at the two levels that I'm interested in. The first one is, as we said, the 25.79. And then we care about the 24 handle. So 25.79 and 24. So let's add those. 25.79. And then we need the 24. So what I can do is I can start by looking at this max loss, right? So if I know at 24 my idea is invalidated, that tells me I'm going to be getting out at 155. So I can size this up and I can be close to 6 contracts, something like that. Then if I know a drop below that volume profile is probably going to lead to a partial exit, it means that I'm not going to lose this money on all 6 contracts. Maybe it's just half of those contracts. So then what I could do is I could literally ballpark 2 different prices. I can say, how much of the trade do I want to get stopped out on at that shorter term drop, right? So that would be below the 25.79 handle. And then what's the residual amount of money that I can let it run until 24? And then I would just size it based on that. So then now I know like where my stops would need to be. And again, for me, I normally am not going to put and rest a stop order. I'm just going to set an alert and then I'll just go check the screen when the alert is submitted and then enter the order. Howdy says, I'm studying for Series 7 right now. Would watching your option video basics help you pass? I would say minimally. I would say the option basics videos that I have would absolutely teach you the fundamental of options. So like, what is a call? What is a put? And some of those questions are in there because I've taken test versions of it before. So it would help with that stuff. But like all of the series exams are kind of like any of these standardized exams where you really kind of have to not worry so much about the underlying education and just get good at the test. So my recommendation on something like that would just be to get a good study guide. And then I'm sure there's tons of YouTube channels that go super deep into Series 7, like what the questions are. That's the way that I would study for something like that. So my channel is really built more for like the practical application of trading for traders. Series 7, Series 6, like not Siri, shut up Siri. All of those kinds of exams, they really are standard like exams that you have to study for that kind of exam. So yeah, hopefully that helps. Kirk says Noah's videos are educational for, yeah, exactly. Yep, that's exactly right. Oh, cool. And you had a good channel, which is good. Awesome. All right, gang. That's all I got. So I'm going to go grab some dinner. As always, you guys know where to find me. Be an outlier. See you guys later.